Getting approved for a new construction loan to build a house has a lot more requirements than simply getting a traditional mortgage for an existing home. But don't worry, because I'm here to break down the entire process of getting a construction loan so that you know exactly how to navigate it when you go to build your own home. And I'm coming from experience, as I recently got approved for a new construction loan to build a cabin in Lake Tahoe. I'll be letting you know what pitfalls to watch out for and all of the special requirements like architectural drawings and your detailed construction contract that you need to complete when trying to secure a construction loan. The first step in the process may seem simple, but it can be more difficult than you think, and that is to identify all of the construction lenders that are willing to underwrite construction loans in the area that you want to build. To start, you can simply Google construction lenders near your zip code. There are large banks that underwrite construction loans like Wells Fargo, Bank of America, Chase, and US Bank. But you'll need to reach out to them with your specific location and project to see if they'll work with you. Because as I mentioned, it's not nearly as easy to get these banks to work with you on a new construction loan as it is on a regular mortgage for an existing home. But don't worry, if you have a lot of trouble finding a construction lender who will work with you, then definitely make sure to reach out to smaller local or regional banks and credit unions in your area who understand the property values in your neighborhood better than the big national banks, and they may be more willing to underwrite a construction loan for you if they think your new build is low risk to them. This is the process that I followed when I was searching for lenders, and I ended up going with a regional bank that specialized in construction loans on the West Coast. Before I move on to the next step in the process, you should familiarize yourself with the different types of construction loans out there so that you can seek out lenders that offer the right type of loan for your situation and avoid wasting time on lenders that don't offer the type of loan that you're looking for. There are two general categories of new construction loans, and they can be differentiated by how many sets of closing fees you'll have to pay, whether that's a single close or multiple closings. Single close construction loans can also be referred to as construction to permanent loans or all-in-one construction loans. As the name suggests, there is only one closing with one set of closing fees. This is possible because the construction loan is automatically converted to a traditional mortgage upon the completion of your build. This single close construction to permanent loan type is my preferred new construction loan, and it's what I used on my own project. The other type of loan is a construction only loan, which, as you guessed it, only covers the construction phase of the project. It has its own set of closing fees, and the loan comes to maturity when the build is completed. This means that the loan must be paid off completely when the house is finished. So you'll have to go out and get a separate mortgage to pay off the construction-only loan, which comes with a new set of closing fees on top of the ones you already paid for the construction-only loan. There are more nuances between the two types of loans, and there are special versions available like FHA and VA, so I encourage you to do some more research after this video. So, once you've found a bank that's willing to work with you on your project, and that bank offers the right type of construction loan, it's time to speak with a construction loan specialist at that bank to learn more about their specific application process and lending requirements. The specialist can map out for you all of the steps in the process, and this is going to help you out a lot so that you don't miss anything that causes a huge delay in getting your project off the ground. While you're talking with your specialist, make sure to ask exactly what the construction loan can be used towards, such as architecture plans, permit fees, furniture, or the purchase of vacant land. And speaking of land, some lenders will allow you to purchase land with a construction loan, while others will not. However, even if a construction lender doesn't allow you to purchase land with a construction loan, they may still pay off a different loan that you have on a piece of land. In my case, I needed to purchase land for my build, but my construction lender wouldn't allow me to buy land with my construction loan. So I went out and got a land loan to purchase a vacant lot, and then quickly turned around and used my construction loan to pay off my land loan. This is just one of the valuable pieces of information that I learned by going through the process myself. I'm now going to go over the requirements that construction lenders are likely to have you complete before accepting your loan application. The first thing that your lender is going to do is have you get pre-qualified or pre-approved to determine your max loan amount. This is going to be critical to your budgeting process so you know how much you can spend on land and construction. Getting pre-approval will require that you provide 2 years of 1040s or tax returns, 2 years of your W-2s if you're employed, or 1099s if you're an independent contractor. They'll need your most recent pay stubs or income statements, any bank or brokerage statements from the last few months, and a copy of your driver's license or passport. The lender's income requirements and debt-to-income ratio usually follow the same general rule of no more than 36%, which means your total debt, including the construction loan, cannot be more than 36% of your household income. Keep in mind that most lenders will want you to have a credit score of at least 680. Next, your lender will require that you submit architectural plans to them as part of the application. That means that you may need to come out of pocket for the drawings unless you can convince your architect to let you pay after you get approved for the construction loan. The architectural plans required by the lender for approval don't need to be engineered yet, so you could hold off on that added cost until after you've been approved by the lender. Another big part of the application process is signing a fixed price contract with your builder of choice. This fixed price contract will have a detailed budget with all of the costs associated with building the house broken down into individual line items like framing, utility connections, and interior finishes like your countertops. The detailed budget also includes the builder's profit margin and overhead costs like the builder's insurance. The contract also typically includes a timeline with an end date by which your builder must complete the project, although the builder can usually use unforeseen circumstances like a delayed permit approval or supply chain shortages to delay their deadline. One thing potential borrowers don't realize is that your max loan amount will also have to cover a contingency buffer that is determined by your lender just in case any unexpected costs come up over the course of construction. So just because you're approved for a construction loan of $500,000 doesn't mean you'll be able to sign a contract with the builder to build you a house for $500,000. In this case, your lender will hold back about $30,000 to $50,000 as a contingency, so you can actually only sign a contract with the builder for about $450,000. Your lender is also going to require that you get an insurance policy to cover the course of construction. You don't need to pay the premium on this policy until you actually get approved for the construction loan, and these policies usually cover a year of construction before they need to be renewed. So, you've been pre-approved, you have your architectural drawings and a fixed price contract with your builder, as well as a course of construction insurance policy. You're finally ready to officially apply for your construction loan. Approval takes longer than your typical mortgage for an existing home, so expect to wait at least 45 to 60 days. At some point during the approval process, your lender will require an appraisal of the property. And you might be thinking, there's nothing to appraise yet. But when it comes to construction loans, the appraisal is done on the projected value of the completed property compared to the values of other recently built homes in the same general neighborhood. This appraisal will be used to help determine how much cash you'll need to put down. And in some cases like mine, the lender may use the approval to conclude that you have so much equity baked into the project that you don't need to put anything down. If you're interested in how I was able to build my cabin for zero money down using a construction to permanent loan, then go check out my other video after this one. The appraisal itself can cost you a pretty penny depending on the rates and availability of appraisers that cover new construction in your area. Once approved, you have 1 year to complete construction, although you can easily get an extension for a small fee. As far as your loan payments during the construction phase, you only need to make interest payments on the incremental amount of funds that are drawn during the course of construction. So if you've only excavated and poured the foundation, then you're only going to pay for the interest on the loan amount allocated to excavation and foundation after the lender's inspector confirms that the work has been done by the builder. Once your house is complete, if you opted for a construction to permanent loan, then your loan is converted to a permanent mortgage. If instead you got a construction only loan, then the loan balance will be due upon the completion of the build, and you'll need to get another mortgage to pay for it. So with all that said, I know that was a lot of information, so thanks so much if you made it all the way to the end of the video. Take it easy, and I'll see you next time.